All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me for another Bitcoin day trade setup analysis, if that's what you want to call it, and broader market analysis. We have a couple of interesting things to talk about here today on Bitcoin. All right. So here's how it works in case you are new to the stream or you're watching this after. First thing I'm going to do is I'm just going to run through a couple of major markets very quickly, right? I'm going to spend like the first half of this stream on that. And then we're going to go for the day trade setups on the 5-minute chart on Bitcoin and see what the market is telling us today intraday. The goal of this stream is to give you some perspective and realistic expectations for the day or maybe the next couple of days as the markets change and provide new information, okay? So with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, and let me remove that slide and we'll get started here. Okay, so, hey everyone. I see all my regulars here, right? We got Bill, good to see you. Stian, Elizabeth, nice to see you. All right, she's back in the loop again. Eligius, Jeff, good to see you. Alex, all right, my Romanians, cool. All right, Michael, hey, how are you? Good to see you. Okay. So let's get started first with, let's look at some bigger picture stuff. Now, those of you that have been following me, is anyone still short this thing? Because I never sent out the early exit, okay? I never sent it out. The short was called on Thursday, I think it was, or Friday, I can't remember the exact day. Now, I'm not short, but I said, like I always say, I call the, people want the signal, I call the signal. There were two short signals. There was one here in this area, okay? 20,250, which wasn't looking so good after NFP came out. Okay, wasn't looking so good, but you know, I don't tend to overreact. Okay, and while all the morons out there calling for Bitcoin this and Bitcoin that because they can't see beyond their own, nose, you know, I was very suspicious about this, and I never called the early exit. I mentioned if you want to get out, okay, but I never officially called it, okay, because I was very suspicious about this thing going anywhere because I know what the bigger picture says and I follow the bigger picture. The market tells me what to think. I don't react to knee-jerk information, okay? Oh, you know, all this argument, oh, high or low, this thing is this, blah, blah, blah. The new rally has begun. Nonsense. There's nothing in the bigger picture, especially economically, that supports that scenario. Trust me, if there was, I would be looking for longs, okay? I would be very happy to be going long if the market said go long, but the market has not said to go long, all right? Now, so the second sell signal on this thing occurred on Sunday, basically. It was developing actually after I wrote the article. This was it right here. Okay, and of course, after the fact, we can see that. But for those of you that have been following me, for those of you that understand who've taken my training program, you know, that's what's going on here. By the way, speaking of the training program, if you're not involved in it or whatever, check it out at markpmarkets.com. There's a link in the descriptive portion of this video. Check that out. Also, you know, real quick while I'm on that, if you're not familiar with 8Cap Partners, they are my sponsor. And if you're a non-US resident, you can open an account with them and you can trade through them. There's a link in the description portion as well. I forgot to mention that. And the thing is, if you open an account and deposit $500, you have to be non-US, of course, and you trade one standard lot, you can get my training for free, okay? And with that, you would have a better perspective as to why this second sell signal, you know, was a place, if you had gotten out of your short, it's a place to get back in. And I talk about that all the time. These things may squeeze you out the first time around, okay? I called the short, Stian knows about this one. I called the short back here, right? That one got squeezed. But I warned of the risk behind that because it was a less than ideal area. Now imagine, Stian, if I just skipped that one, okay? And imagine if we waited for the conservative one, which was this one. Okay, over here. Imagine if we had waited, it never would have stopped out, and now that trade would be a winner. Okay, it would be green. So that's why it's usually better to wait for higher probability locations. And this area, a resistance within a broader bearish trend, is a higher probability location. And now the market is agreeing with it. Okay. The market wasn't agreeing with it previously, but it is now. And it's asserting the broader trend, especially with a move like that. The broader trend appears to be reasserting itself. Okay. So if you're not in this, if you're not short, you don't short this now. I mean, what's the price of this thing? It's almost back to 19 even. Okay. If you're not short this, you don't chase this. The short opportunity, the high probability, lower risk short opportunity was this area. Okay. You don't chase this now. Oh, I'm gonna, Captain Obvious told me to short it. I'm going to short it now because it looks weak. You missed the opportunity. So now you have to wait for the next setup. And there's no setup there anyway. There's nothing to do here on the swing trade time frame. If you're short, you let it run. Okay. If you're not short, you do nothing. You wait. You don't short this thing, not on this time frame. On the day trade time frame, that's another story. We're going to look at that, okay? But you're not going to be looking for a large move. The large move is the swing trade time frame. That's the whole point. That's the whole point of the signals, of swing trade signals, participating in the broader moves, okay? And that is what the Discord community is about. Make sure if you're not in it, go to it. It's still free. It's going to be free for another few days. Basically, next Monday, I'm going to lock the premium channels. Okay, so the signals channel, the active investors channel, and the trade of the week channel are actually going to be locked. You're not going to be able to see them anymore if you're a free member. You'll just have like the free member area, which I'll be putting stuff in there. But if you want any premium information, you're going to have to be a member. Okay, so that's coming. Now, if you're interested in that, send me a private message. I may not be able to answer it right away, but send me a private message on the server. Let me know if you're interested, and you will qualify for an early bird coupon that I'm going to send out only to people who message me. I'm not going to send out an email with this particular coupon. I'm not going to do it. Okay. So if you're interested, let me know, and I will send you a coupon, and you will get a better price when I lock the room. Now, when I lock the server, there's going to be a 7-day free trial. So you're going to get another 7 days on top of, once you sign up and you put your information in, you're going to have another 7 days. And if you cancel for whatever reason, well, then you don't get charged. Okay. Anyway, but that's coming. So just letting you know. So if you want a good price, message me. Okay. All right. So anyway, so that's the Bitcoin situation. Does that make sense? Any questions about that? I mean, again, I hope you learned some lessons here. What you should do, a good exercise, is go back. If there are any fake gurus, because I'm sure you'll still find some of their videos touting Bitcoin and blah, 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 just take notes so you don't forget. Oh, this guy said Bitcoin was going to 50K. This guy said Bitcoin was going to 30K. This guy said, and then market outcome. Okay. And then you have to try to put the puzzle pieces together. Why? How come the market's doing this? Why were there all these other people calling all that other stuff? Why? It's because they're looking at nonsense. They don't understand. These people have no experience. Okay. Again, I always like to bring up the NFL. You could bring up any professional sport. A Pee-wee leaguer can't play in the NFL, not only because he's too small and all that stuff, but doesn't have the experience, right? A 20-year-old guy who's been playing football for 20 years is in the NFL, and they are on a certain level, right? And when in the markets, when you don't know what you're up against, right? Here's an interesting picture. Just picture this. So as a Pee-wee leaguer, if you manage to get onto an NFL football field, right, and you line up on offense, you can see what's in front of you. Okay, you can see that nose tackle, you can see those linebackers, and they're not going to look very friendly, right? And they're probably going to scare you off the field before the play even begins, right? In the markets, you can't see what's in front of you. You can't see the competition and how good they are. You can't see the robots. You can't see how you're going to get fleeced. So it looks in and says, oh yeah, I'm just going to do this, because you can't see anything. All right, there's no level playing field, anything here. The retail trader is there's no advantage at all to being a retail trader. You have zero chance, very little chance of getting through this game, especially if you consume conventional garbage, which is everywhere. It's unbelievable. You know, I was watching, I'm going to get off this rant here in a minute, but I was watching this one video of a guy The technical analysis was sound, okay? But I noticed this, and I noticed this in a lot of fake gurus, okay? Because this guy's a fake. They like to polish information, like factual information. They like to make it more interesting than it is and give it more of a perceived value than it actually has. It's like, I like to call it like the pet rock effect. You know, you take a rock, you put some eyes on it, you put some hair on it, and you put it in a nice package and you sell it. It's a rock. It's a worthless rock, but you made the rock look interesting. So people will spend money on that novelty because it's a pet rock. Understand? They're doing the same thing. It's all over YouTube. Oh, look at this economic chart over here, and then you put this over, and then you overlap this over here, and look, and it means that. Okay, it's interesting, but it doesn't give you any advantage. If your goal is to make money in this game and protect your capital, which actually that should be your goal, is protect capital. That should be your number one goal. That information is, well, it may make you sound smart and give you the illusion of being informed. In the eyes of the market, it does not help you. Okay, it does not give you any kind of advantage at all. So stop believing that illusion. Stop. Okay, enough of that rant. Let's move on. So this is Bitcoin. Any questions? Let me see this some of the chat here. What are people saying to me over here? People yelling at me? Let's take a look. Okay, so Alex, I haven't checked Twitter, but I'm guessing that everyone is screaming right now. Most likely, Alex. You know how the herd is. They're usually wrong and they overreact. They react to what they see. You should be preparing for what you don't see. Right? That's what I do. Also, they're not usually objective. Hey, Kim, Kai. Okay, cool. You're short. All right, good. You get the private message I've sent you. Oh, Michael. So I haven't checked yet. Maybe I don't know when you sent it, but I will respond to it. Sometimes it takes me a little time to respond. I apologize. It's just I have so many things going on, and I have to I'll get to it. But thank you for the message. I will respond to it. Okay, so I haven't seen it yet, but thank you for letting me know that you sent one. Waiting for 1750. Consider longs. Okay, so as far as Bitcoin, 1750. I guess you mean 17,500. Well, here's the thing. The order to cover on this thing is what, 18.5? I forget exactly where I put it, but basically that would make back the 2,000 points that was lost, that got squeezed out over here when we took this trade, right? When I called that trade. So that makes that money back, at least if you're in it. It's got another 700 points to go here. So the overall, now 17.5 is still a considerable possibility, okay? I've been calling for it all summer, right? This area here, 17.5, 17 even, and the markets just rejected it and rejected it and rejected it. But even with all these rejections, okay, even with all these rejections, the market has not changed. Nothing has changed. The bond market hasn't changed. Interest rates haven't changed. So I saw any bullish nonsense, I have zero confidence in, zero. Okay, if it's an altcoin, especially because the environment doesn't support any sustainability. That's the problem. Okay, so Elizabeth, while it's possible that we can test the 17K area, there's no way to know for sure. The structure favors it though. Okay, the probability of this structure favors it. This is basically a lower high consolidation. The whole thing is a lower high consolidation. So a lower low is favored. Do we get one? I don't know. But that's, if you're going to lean on a probability, that's the way to go. Okay, until the market or unless the market can prove otherwise. So far, and my key test for that is I need to see a major resistance get cleared. This thing refuses to take out any major resistances, and people refuse to recognize that. Okay, strong markets take out resistance levels. Weak markets respect resistance levels. So minor ones can get broken, sure, but we have a major one between 22 and 25K, and we don't even touch it. Okay, this is a weak market, and it's just Bitcoin. You have to understand, Bitcoin is a follower. It's not a leader. People, oh, Bitcoin, yeah, okay, I understand. It's the leader of its space, but it's a follower of the S&P. It's a follower of the dollar, the bonds. Those are the markets that dominate, okay? Not Bitcoin. So understand that it's just a little piece. It's a little piece of the puzzle. All right. Don't think that it trades on its own. It does not. Okay. So you have to look at those intermarket relationships because you can get a lot of important clues. I was calling the bond market. All right. And I recognized the risk in the stock market back way before the stock market turned. That was back in November, December of a year ago. Well, all the other clowns and all the other morons were too busy saying that everything is going to double and triple and you're going to make money forever and blah, blah, blah. I saw the risk elevating in the bond market. I was the only one talking about it. It's amazing now. Lots of people talk about the bonds. It took them a while to recognize, but I saw it first. How come I saw it? Do I have any kind of special, like magical thing going on here? No, I saw it because I understand the economic relationship and I understand the business cycle. That's why. And that's something I learned as a CMT. Okay. And I've talked about that concept and that theory here a number of times. And Bill put a recent link to that information in the Active Investor channel. Bill, you should put that. Bill, I have to talk to you about putting information in the Learning Resources channel. But he found this great link on that whole thing. Okay, it's public information. There's no secrets here. And just by knowing that, I was able to spot basically the top of the market before lots of people. Because again, on top of that, even if I tell you, look, it's the top of the market and the stock market's doing great, you're not going to want to hear what I have to say. You're gonna be like, yeah. I'm too busy making you money on. I'm too busy investing in this market that looks safe. You're not going to listen, right? Because it's human nature. I can't help you with that. I can't help you get over your human nature. I was telling everyone, okay, and but the stock market, the bonds rule. Okay. Anyway, and I'm gonna be looking for the bottom the same exact way, and I don't see it yet. Okay. When I see the bottom, I'm gonna start talking about it, but I don't see it. The market needs to show it to me. Okay, so next, can you take a quick look at Netflix for a swing trade long? All right, okay. We were talking yesterday about FTX. Okay, we might have another reason to be going small. Well, there was never a reason to go big, ever in a very long time. All right, let's just real quick. So I'm supposed to be looking at the major markets here, man. I just get off track. Let's look at the bond market. Okay, this is where your judgments should really start as far as the bigger picture. And you can't judge candle by candle on this thing. We want to see like the general pattern. So the bond market sits on its low. Okay, now keep in mind, we have CPI coming out on Thursday. So, this green candle doesn't really mean anything. Yes, it's a buy signal developing in the bond market. If you were an aggressive long and you wanted to buy bond futures, okay, that's the signal. After this candle closes, right, next one takes out that high, you have a long signal. But how far does that thing go? Can it take out this resistance? That's a key question that only the bond market can answer. And that can take a few weeks. Okay, so my economic outlook is not going to change until I see a major change taking place here. One green candle is not a major change. Basically, we're still sitting on the low. Okay, and obviously the Federal Reserve has no intention of changing its agenda anytime soon. Okay, so with that being the case, probability favors a lower low on this thing. We have to see if we get it. Maybe the market starts to find out new information and starts pricing something else in that no one knows about. That's possible. And we'll see that reflected here. It's not there yet. Okay, it's not there yet. When the bonds turned on the stock market, there was about a 4 or 5 month lag, right? Where the stock market, it took 4 or 5 months for those bonds, the effect to really take effect. Keep that in mind. All right. So just because, even if we get the economic change in the bond market, I'm not expecting a quick change in the stock market. All right. But what it will mean is the risk is coming out and it's beginning a more attractive time to start investing, even if the stock market is making new lows. Keep in mind, I said that. Put that in your notes, because the bond market may change and the stock market may be still making lows. And that doesn't make sense. It's irrational, but it means that the risk is coming out. Okay. It's not something that you're going to see like, visually like you'd like to see. Okay. So I'm Learning Resources. Okay, so yeah, Bill, I don't know if you can put the information that you put in the Active Investor Room, you can put it in there. Like, it's nice if you put it in both, so people can always go back and they don't have to scroll through the Active Investor Room. But I don't know if you may not have permission to I have to change the permissions for you. I keep a really, really tight server. Okay, so I have to I have to change something there, okay, so that you have the ability to do that. But anyway, I'll talk to you about that. Thank you, and I appreciate that help. It's enormous help, and I think it provides a lot of value, especially for these beginners who have no idea what's going on. These are the first concepts that they really should be consuming, not the garbage that's constantly put in their face. Anyway, all right, let's move on real quick. Let's take a look at the NASDAQ. Now, I see a question here about, what was it? You're asking about Netflix? Okay, so Netflix, part of the FANG group right there, that's going to sort of be a reflection of this. I'm willing to bet that there's going to be some similarities without even looking at Netflix yet. Just take a look at this, right? This here is the NASDAQ, and look at the bounce. Interesting, right? It's interesting. Let's just jump over to the S&P real quick. It's interesting that, this market is up. It's up a little bit today, and Bitcoin is just completely getting hammered, which, talk about the relative weakness, right? What's going on here? Usually they kind of follow each other. Not going on right now. Bitcoin must have its own drama going on, like Alex referred to. But the thing is, the stock market is in a very vulnerable area, okay? This area right here is not a place to be buying. So first, you have this initial push, the initial sell from that was the FOMC that got that going there, and now look for the lower high. All right. So if you're in stocks, you should be considering the short side or use options to get short. Like it's in fact, when taking shorts in stocks, it's usually a better idea to use options than it is the outright stock. There's a lot of advantages, especially in terms of risk control when using options. I'm not going to sit here and teach you about options, but you should learn about them. Okay. Now, so question, let's take a look at Netflix and FLX real quick. So, okay, interesting. It doesn't reflect the NASDAQ exactly. Is that right? Yeah, it's Netflix. Okay. Right. So the NASDAQ and the S&P have rallied a bit, and this thing is doing its own thing. All right, no problem. So they don't always have to follow. There's just a general tendency to follow. Here's the thing. So Netflix, you have to keep this in mind in here. Look at this. Look at this right here. Look at that, right? Obviously, whatever that was, a negative report, whatever it was, that gap tends to act as a support or a resistance. In this case, look at the resistance there, okay? Look at the boundaries of this thing. Look at the midpoint, okay? That's the midpoint of the gap. And look at the top of the gap. Those are levels, okay, on this thing. Notice the reaction. It had multiple reactions off of the gap boundary over here. Notice that? So that's interesting, and it may act as a support now, as it pulls back to it. So that's as far as levels. The general structure of Netflix here recently, this is a higher low. You have this higher high, okay, but it went into the gap resistance area. It's pulled back, and now it's in question what to do here. Also, notice there's another gap over here. Okay, so again, gaps tend to act as support or resistance levels. That's not something I made up, by the way. That's something that's well documented. Okay, so here's the thing. In a situation like this, let's take a look at the weekly chart real quick. All right, and generally, this structure on the weekly, it's not exactly bullish. Okay, so keep that in mind. Also, you're in an environment that doesn't exactly support sustainable rallies. So if you're thinking long on this thing, be very careful. It might be a long off of this. You may get one swing trade off of this, possibly. You get the pin bar, all right? But don't expect this. Don't expect that. That's not reasonable. Maybe you get a test of high, and it's aggressive because you're going against that bigger picture. Keep that in mind. Also, the stock market situation. The stock market is generally trying to rally right now, okay? And it's at a potential turning point, and this thing is sitting in a support. This thing should be doing better. This thing should be up here. This thing should be following. It's not. So there is a hint of relative weakness there. All right, keep that in mind. If the stock market turns, right, and we get a sell signal, this thing is likely to break the support. All right, so just keep that in mind. If you're going to go for the swing trade, it's aggressive. All right, just you measure your risk. Make sure you take the stop where you should take the stop, and that's the best you can do. All right, the recent structure here is somewhat supportive, but there is a lot of things that point to a possible change of that. Okay. Okay. All right. All right, as long as it's within reason, okay, and as long as you're not expecting anything ridiculous. All right, now let's take a quick look at the euro and the dollar real quick. All right, we'll start with the dollar, and because you guys should always be looking at this. All right, you should check the dollar every day, even if you don't trade forex. You should look at the dollar every day because this is a big factor here. All right, the dollar is still the world reserve currency, and its behavior affects everything. So I mean, look, it's trying to find support in an area where a support is likely to be found. Okay, even though but there's a bearish pin bar there. Yeah, but the location of the pin bar renders it basically useless. So a bearish pin bar at support doesn't really mean anything. Okay, so we want to look for the reversal. If the next candle, if this thing closes and the next candle opens and takes out that high, you have a buy signal. Okay. If we see a buy signal in the dollar, we're looking at a sell signal in the euro. And I'll be all about shorting that euro again. All right. I've had 2 nice shorts in that thing. You could see the results in the channel. And that's just an inversion of the dollar here. Okay. If that thing turns into a sell signal, remember, Steven, we were talking about this yesterday. If this thing turns into a sell signal in this area, I'm going to short it again. Okay. There's nothing there at the moment, but we are at a location to be watching for shorts. Don't be confused by this. You can say, oh, but it's a higher low. The trend is changing. The trend isn't changing yet. Okay. It may be trying. Okay. It may be trying to change. But as long as these resistances, here, let me show you. As long as these resistances stay intact, all right, then this is just noise. It's just a consolidation, just like the dollar, right? If the dollar is showing us a consolidation, a consolidation within a broader bullish trend. Does that make sense? All right, so that's that. Those are those markets. Keep an eye on the euro for a short. That's like on top of my radar right now. Let's now go to Bitcoin and let's go to the perp chart. Okay, the perp chart. It sounds illegal. All right, let's take a look. Let's use. Let me see. Well, I guess we'll use. I like the Binance one. I mean, it doesn't matter who you use. Actually, you know what? Maybe we can use it. We can use BitMEX. Like I always say, you should use whoever you trade through. Okay. Do I have BitMEX over here? BitMEX. You should use whoever you trade through. If you have a BitMEX account, use the BitMEX feed. If you have a Binance account, use the Binance feed. Okay. Now, let's. So we know our bigger picture. We know the bigger picture is bearish. Now, does the bigger picture? Here's an interesting question for you. Does the bigger picture affect our day trades? Well, it can, right? We know that the bigger picture is generally bearish, but my point is this: don't be confused by it. You can be very confused. Well, the bigger picture is bearish, and I'm trying to go long on the smaller picture. It doesn't make sense. Well, because the smaller picture is another story. Don't confuse the two. Don't let this confuse you. Yes, the bigger picture is bearish. It's been bearish for a long time, but there's lots of buying opportunities on the smaller time frames. Okay, you have to isolate the time frame and stay within your time frame. Let's go to a 30-minute chart. All right, so the 30-minute chart, the purpose of the 30-minute chart is just to get intraday levels. These do not carry the same weight or probability as the larger time frame levels. Keep that in mind. We have a resistance right here. Okay, this mouse is not cooperating with me today. We have that resistance there. We have this resistance there. Those are resistance levels. Okay, let's take a look. What kind of supports do we have on this time frame? We have this. It's trying to double bottom. It's trying, but it's not a double bottom. All right, to confirm this is a double bottom, we need to see like a strong bullish candle here. There's nothing there. So you can't, and the reason why I mention that is because you can't step in front. Okay, people, oh, double bottom. Oh, my oscillator says there's a signal there, and they just step in front of it with no confirmation because they can't control themselves. This game is more about waiting than anything else. Okay, and having like basically your plan set up before, and then letting the market come to you. That's really, especially as a day trader. So I'm looking back here. I'm looking for significant levels and seeing if there's any overlap. All right. Notice I'm not wasting my time with, drawing trend lines all over the place. I'm just looking for levels. Why? What separates a horizontal trend line from a standard trend line? Well, a standard trend line isn't bad. Like, when you're connecting 2 points and then you have a slope, a positive or negative slope. Okay, that generates a point in the future, but it can lead to a lot of confusion, especially if that point in the future has never been touched, right? It's still highly random compared to a horizontal line that's basically, it's based on a previous reaction. If there was a previous reaction, then basically it's reasonable to anticipate that there will be some type of a reaction there again. Why? Because there are traders that are caught in that area. That's why the market behaves that way. It's a behavioral thing. So, it doesn't mean that you will get the move. Like, if we're anticipating buying over here at a support, which is typically what you should be anticipating at a support, it doesn't mean you will get the buying. It just means that, if sell signals show up here, you should probably be extremely careful because you may get a reversal in your face. Okay. If you get a buy signal, that makes sense. Even if the broader movement here is bearish, which it is. Okay. It doesn't, there may be a 200 or 300 point move or something like that up into this area. Why not take 100 points out of that if you can? That is the goal of the day trader. Okay. Not to make big moves. You're trying to make the least amount of money possible for the least amount of risk. Now, think about that, right? What I just said is very unconventional. I want to make the most amount of money possible for the least amount of risk. The least amount of money possible. Why? Why the least amount of money? Because there's a better probability that you're going to get out green. That's why when you try to maximize, the more you look for, the less of a probability you're going to get it. Okay, so we want the least amount for the least amount of risk. We want to be able to get out green as a day trader. That should be your goal. Okay, now, so we know our levels. Now let's zoom in a little further. We know we're sitting on a support. We have a 30-minute inside bar developing here. We have a long time before that candle closes. We have 20 minutes. I'm not going to sit here for the whole 20 minutes. All right, now we go to a 5-minute chart. What's going on in the 5-minute? Now, yesterday, and I want to point out yesterday's price action and how tricky it was. But before I do that, let's just see what's going on here. Because, I talk a lot and then I miss moves. There's lots of moves here. So look at this bullish pin bar, right? 5-minute chart. That was what? That was like basically when I started talking. And I mean, look, it generated something there, but okay. And then it gave it back. Okay. I mean, that's a noisy market. All right. Now, we saw before when we looked at that NASDAQ and S&P that they were trying to be positive today. That can help Bitcoin out intraday, possibly. All right, but don't think that that's like the main thing. Again, pay attention to levels, pay attention to candlesticks, pay attention to structures. Right, we're still competing with a bearish structure here. This thing is generally bearish. So what we should be doing, I'm going to give you the conservative side and the aggressive side. The conservative side is wait for a resistance, even if it's a minor one like this. Wait for a resistance and wait for a sell signal at the resistance, right? And that's in line with the larger structure, the larger intraday structure, possible lower high. Perhaps you get test of low. That's all you're looking for. If you risk 50 to 100 points, you're only looking to make 100 points, maybe 150 points. Don't be thinking you're going to get 500 points. Again, if greed controls you, you have very little chance of getting anywhere in this game anytime soon. You're just going to make a little money here and there, and then you're going to give it all back. So you might as well donate it to a good cause, okay? Because you're just wasting your time. You cannot let these emotions get in the way. You have to be objective, and you have to be realistic. No one likes to be realistic in this game. Everyone thinks this is a magical game where the markets are an ATM. It's not. Okay, your chances of winning are very low. I mean, optimistically, being optimistic, you have a 50% chance, I would say, especially with day trades, of being right, which means you're going to be wrong half the time. Okay, that's being optimistic. So anyway, the point is, as far as day trade setups, there's nothing here. So we know our conservative level to look for shorts. What about our level for longs? Well, the more aggressive. Well, we have this level right here. We have some reactions off of it. I mean, look at this little movement right here, right? Is this an inside bar? Let's take a look. Let's just take a look a little closer here. This is an inside bar, okay? It's inside the previous range. The high of that bar is 19,458, so 460. Right now we're at 449, so that's an aggressive long, okay? The aggressive long is right there. Your stop would have to go here, not what 361. You're looking at about 100 points, 100 points of risk, okay? Notice I'm looking at the risk first. Not even looking at the reward, only interested in the risk. What do I have to risk if I'm interested in this possible momentum reversal? And it's aggressive, which means it may not go very far. It's a higher risk trade if I take that. Remember, just because a setup appears doesn't mean you have to take the trade. You have to ask yourself, do I want to take this trade? Am I willing to take that risk? If you're like, I'm not sure, then don't take the trade. By the way, if you're following me on this, I'm not putting on real trades here, just so you know. This is so you should, I encourage you to paper trade it. We're just looking at the setups and we're looking at the behavior. Okay, it's like a play-by-play. I'm not putting on real trades. I just want to make sure that that's clear. Okay, so again, you have a potential long setup developing here. If the long goes off, right, if it becomes active, which it may become active like right now, you're looking for at least 100 points. So where does that put you? See, so 560. Where is that? 560. There, the trade is now active. So 550. So basically, you're looking at. I'm gonna put the area you're looking at. So long 460. Okay, and you're looking at this area. You're targeting this area right here. At least that's a minimum. Okay, so if the market goes straight there, let's say this next candle closes, right? This 5-minute candle closes, and it closes up there like that. That's your first opportunity to consider profit taking. Now, if the thing closes strong, right? We're talking 5 minutes now, and the next 5-minute candle gets a little red, and then start like within 2 minutes, it's like that. You stay in, right? You give it a chance, right? And you want to see if you can get more than your reward risk, right? So if you're risking 100 points and you can get 150 points, that's ideal. Now, if that thing starts really moving and there's no reason to exit, okay, this happens a lot. And then people ask me, where should I get out? If that thing really starts moving, then you give it a chance until it starts to give you a hard time. Especially, and this is where putting on multiple lots really comes into play. So let's say you put on 2 contracts, right, at this trade right now. Let's say you put on 2 contracts. The goal is to get out of 1 contract at 1-to-1 reward risk, right? Lock something in, or maybe a little bit more, right? Don't try to hold both of them and think you're going to maximize. That's where you run into problems. You let the winner run. You let one run, okay? And then you get out when the market tells you to get out. That and that exit is going to be random. It may be something spectacular, which is rare, or you may just, so you may get out for like that. It may pull back, and by the time you get the signal, you're locking in only 100 points there, but you could have locked in 150 points or more if you got out at the peak of that move. There's no way to know that the peak of the move is the peak until after the fact. There's no way to know. Okay, you can use fibs, and you can project some levels, and you can use those levels as predetermined exits, but it doesn't mean the market will turn there. So the other key thing is, if you get out of something early, okay, let's say you get out of 1 contract at 1-to-1, it goes 1.5-to-1, and you're like, I'm just going to get out. Okay, for no reason, you just get out because you want to take the profit. There's nothing wrong with that, and it runs without you. Do not feel bad. Okay, it's human nature to feel bad. I could have made. That's greed. Okay, and that's going to affect your next trade, because now I'm going to hold on to this thing. And that's when you should not be. The more you hold it, the more risk you take. Okay, so do not feel bad. You should not feel happy, and you should not feel sad. Okay, you need to be objective. Separate yourself from the human nature. Human nature means emotions. Separate yourself. If you can't separate yourself, you will always be part of the herd, and you will always lose, because the purpose of the herd is to be fleeced, not to make money. It's the illusion, right? And that's why you have all these YouTubers and all this other nonsense telling you, yeah, you're going to make money. And they all bake in this message of hope. There's no hope. Stop with that, okay? If you like those appealing messages, then you need to go do something else. Go, I don't know, do something that makes you feel good. Not this. This is not a feel good thing. Don't use this to feel good, okay? You have to be objective. You have to be as separated from human nature as possible. And it's hard. You may understand my words, but it's very hard to accomplish. So as I'm talking here, we'll see how this next candle plays out, and then we'll make a decision. Now, here's the thing. Hold on. So this little red inside bar, it's actually now generating a sell signal now, okay? So here's the thing. What to do here? What do you do? Well, the stop, we talked about where the stop is. So you have 2 choices. You can exit now, okay, and take the small loss. What would that loss be? 25 points. That's not too bad, okay? Or you can give it the full stop, which is like about 100, okay? That's going to depend on you. There's no right or wrong answer to that. Theoretically, you should not see this price action, but keep in mind, it doesn't mean that the next candle won't reverse and do that, right? See what I mean? That's why I'm not quick to get out on these sometimes, especially on this time frame. You know, if this was a daily chart, that's another story. But on this time frame, especially, I try to give things more of a chance at certain times, not all the time. This is a tricky situation, okay? And the only thing that's really going to get you through that is experience, knowing when to give it that little extra room and knowing when not to, okay? This is a tiny candle, by the way. So, you know, it could be just noise. Keep in mind that tiny candle, all it is imagine if this candle was still open, right? That green candle, it would just be a tail forming on that green candle. Okay, that's really all it is. And I see what I mean? Like it's coming back. So now let's just say, let's mention the scenario. Let's say you just got out, okay? And you took that 25-point loss because you weren't happy with it. Let's say you got out and the next candle does this. You're like, they faked me out. What to do? Get back in. That's what you do. Okay, you may churn a little bit. That's part of the day trade game. You get back in because it's giving the buy signal again. And there are going to be times when you get faked out like that. All right, but what really a mark of experience is, you know how to get back in. If it fakes you out again and you have to get out again and you take another loss, you step aside, give it a break, let it provide more perspective. Okay, but that's the game plan for something like this. Now, real quick, all right, so we'll see how that plays out. Let's go to yesterday's price action. Okay, let's go back to yesterday's price action around this time. Let's see if I can find it. Is this yesterday? Let's go to yesterday's open. Is this it here? Let me see. Let me see if I can find it. Hold on. Just give me a second here. All right, here's yesterday. And I want to talk about what we were looking at yesterday, okay, and how it played out. So it was right around here, okay? I think it was right around here. And I called the long. Remember that, you guys? You can actually watch the video. It's still on YouTube. I called the long right around here. Look at all this noise and nonsense that you had to sit through. In fact, I think it was this candle right here where I called that long, right around there, something like that. And eventually, after about a half hour, maybe, it worked its way to something. This was worth something. But if greed got in the way and you held on, you gave it back. Okay, that's why, again, you take as little as you can for the least risk possible. Don't stay in these things. Now, there were more signals throughout the day. Obviously, we can see this after the fact, but there's a lot of noise in here. All this nonsense is noise, and this can easily shake you out, especially if you're very, if you're too sensitive, right? You have to know when to give these things a chance. So just keep that in mind. And again, if you held on thinking that, you know, you got the bottom of Bitcoin, you're exposed to this. That's why you cannot hold on. A day trade is a day trade. You take that money when you can, and that's it. You're out. Okay, so let's go back to today. How's this thing doing? Ooh, that doesn't look good. Okay, so now that should be, I mean, I would call an early exit on that. Okay, should not look like this. Out. So what is that? 394, and we were along at, what was that? 450 or 460? I think it was 460. Okay, so what is that? 60 or 70 point loss? That's it. Out. Okay, that's how you have to judge that. Especially, remember, keep in mind the broader trend here, the broader movement is bearish. So this thing, you don't want to hold on to that thing. Oh, it's back to support, I'll give it a chance. Not now, not after this candle, right? That candle's too big. All right, so we should not be seeing that type of bearish momentum if it's gonna reverse. So what about the short side? Have we just missed a short signal? I mean, was this little candle here a short signal? Yeah, you can say it's a short signal now, all right, but you can't chase this thing now. Best thing to do, leave it alone, wait for the next setup. And because this thing can't rally, this thing tried to rally 2 times, right? We have this big green candle here. That was its first attempt, it failed. Second attempt, we tried to go long that one, failed. Okay, this failed. This thing is probably not going to rally. So hold off on the longs. That's what that tells you. All these longs that got into this thing are stuck, and watch this thing break the support. Now you say, well, if you think it's going to break the support, why wouldn't you short it? That's aggressive because you're selling into a support and it can reverse in your face again. I personally don't like those type of trades. Doesn't mean it won't work, but you know, if this thing turns green right away, I would rather look for the long. You know why? Because you have all the Captain Obvious people piling into this thing short, and if they get squeezed, you're going to see the move up to here. That's why I'd prefer the counter trend in that situation. Okay. I like to short. When I go short, I don't like those breakouts. I've been caught many times. So I know what can happen, right? I like to short resistance levels. So, if we were at like a clean cut resistance or whatever, then I'd be much more confident in selling in a place like that compared to into a support where traders get caught. I like to capitalize on those traders who get caught. So I tend to look for counter trend trades in those situations, but that's just a personal preference. Okay. All right, you guys. Dollar CAD broke. Okay. That's interesting. Well, I mean, the Canada part of that may have their own problems. I mean, I think they had a speaker. Was it yesterday or maybe it's today? They have a speaker speaking. So maybe that has something to do with it. I don't know. But the dollar still looks pretty healthy. So I don't know. I'm still bullish on the dollar. All right, you guys. So any questions? Any questions so far? This thing is probably going to break that support. By the way, if it breaks that support, what's next? Let's see. Well, it's still got a little ways to go. It's got to clear that. Let's go back and let's take a look. What's next? If that support breaks, man, I don't see anything here for a while. I really have to go far back here. I can't even fit it on this chart. I'm going to have to go to like a 15-minute chart. Let's see. What are we looking at? We're looking at like this area right here. That's what you're looking at. 19.2. That's what you're looking. So right now we're fooling around at what price? We are at 19.3. Oh, so that's about 100, 150 points. All right. So, so basically you can round that to 19 even. I mean, that's going to be basically your next support area generally. Okay. This is the 15-minute. So just going back to the 5-minute chart here, keep in mind, it hasn't broken yet. Okay. So you just want to point one more thing out. I'm not making like projections and I'm not saying, well, it's going to go to 19K. Trust me, it will. I'm not saying that. It can go there and the structure favors that idea, but don't get that idea stuck in your head. Okay. Because if this thing reverses over the next candle or two, this thing can squeeze. So you have to be open to both sides. As a day trader, you always have to be open to both sides and you have to be quick. You can't sit there and get stuck on an opinion. All right. So I'm going to leave you with that. Let me know, guys. Okay. Oh, again, Bill. All right. No problem. All right. So you guys, again, if you have any questions, you know where to find me. Make sure you check all the links in the description. There's a bunch of information there, like I talked about earlier. Okay. I'm not going to repeat that again. Again, I'm here every day. And on Monday, I stream twice on Mondays. So that's a lot of information I'm putting out. I hope you guys get some value out of it. If you have any feedback, I'm always open to it. By the way, it's hard for me to answer. People send me emails, people send me messages all over the place. It's hard for me to just get to those. So if you send me a message, please be patient or just send me a message right here, unless it's really private. But this is a good way to communicate with me because I could see it and I can give you an answer right away. This is also a good place to give me feedback. If there's something you like or something you don't like, don't worry. You're not going to hurt my feelings if you don't like it. It allows me to help you. So, it's okay. You can tell I don't like this. I think this sucks. Okay, no problem. I want to make it better for you. And the only way I'll know is if you don't like it. Okay. So anyway, I'll leave you with that. Hey, everyone, thank you so much for being part of my stream here. I hope you got some value. Enjoy the rest of your day or the rest of your evening, wherever you are in the world. And thank you for watching.